Inflation came in hot, and it's totally changing the way people see rate cuts this year. Guys, they're expecting 0.3% for the month. It got 0.4%. They're expecting annualized at 3.4%, came in at 3.5%. Now, core inflation, the one that the Fed tends to look at more because it excludes the more volatile food and energy, came in at 3.8% versus an expected 3.7%. Now, I read that car insurance was a big jump, 22% year over year. But Mo, why don't you look at another breakdown of the different categories and how it looked for inflation?
Yeah, so if you look at the seasonally adjusted changes from the preceding months, this is from the Bureau of Labor Statistics, and you just look at this column here, you can see there's not a lot of negatives in here. There is fuel, oil, and when you come down here, it comes down to new cars and used cars. Everything else was positive. So that's probably why you had that uptick and why that core number is still what it is.
So Mo, pull up the estimates for the future in terms of rate cuts, because I want to show you guys something interesting. This is an article from Barron's on December 14th. News from the FOMC policy statement. Futures markets expect 6 rate cuts in 2024 versus 4 earlier. By January, it had gone to 6 or 7. Now, guys, the reason I bring this up is everybody spends so much time worrying about what the Fed's going to do, worrying about what the future holds, etc. That should not be your focus. Keep in mind, I love looking at these things just because I'm interested in it. And you should too, just if you're interested in it. But it's important to separate your emotion from this, your decision-making from this. I say this example all the time. I don't care how far back you go, 10, 20, 30, 40, 50, 100 years. The U.S. economy is better today than it was back then, and it's likely to be better in the future than it is today. And you know what's happened in our world in the last 30, 40, 50, 20, 10 years? A ton of things have happened, good things and bad things. But guess what? You have the right process to buy the right companies and invest in the market on a regular basis. It doesn't matter what happens out there. You're not going to be able to guess what's going to make things go up or down. What's important is you have the emotional ability to sit there and say, I'm going to make the right decision. I'm going to stick with this company because fundamentally it's good. We talk about Nike. It's down 50% from its all-time highs, and now I'm hearing the negativity on Nike. Yeah. PayPal is down 80% from its all-time highs. Now you hear the negative on these things. Tesla is down 60% from all-time highs. Now it's the negative comment on Tesla. I just saw that NVIDIA went to a bear market yesterday, and you should have seen the articles I saw today about NVIDIA. Why it's justified? Because too much. It's like, guys, where were you guys when the stock was flying high? Where were you then?
Yeah.
Give me a break. News follows stock prices, not the other way around. And the market's reacting a lot to this thing. But guys, keep in mind. So Mo, what do they project? Remember, we were talking about an April or May rate cut at one point in December and January. First off, for April, what's it looking like?
So we're in April, but for the May meeting.
For the May meeting.
Yeah, for the May. So guys, I have been watching this for the last 15 minutes. There's a 99.3% chance that we stay the same in May. Just 15 minutes ago, there was actually a 3% chance that we were going to increase rates in May. Then there was a 3% chance that we were going to decrease rates in May, and now you can see where it is. So this is just whipsawing around. But the increase was the incredible thing. Paul, I haven't seen somebody talk about an increase in forever.
Do you see anything in the future that talks about an increase? Because remember, Kashkari came out this a few weeks ago and said, and he's the Minnesota Fed governor. And guys, by the way, I know we're biased because he's from our area, but I do like his stance. His stance on inflation, his stance as a Fed governor, I think he should be a Fed chair at some point. But he sat there and said, guys, I still think we're going to have cuts, but it might be at the very end of the year because we still need to keep this inflation thing under wraps. And as you can tell from today's data, we're not fully out of the forest for inflation. It's still there, and that's okay. Now, I know everybody out there is feeling it. People do feel it. Just like, and I really, really respect Powell, Fed Chair Powell, when last year, the year before, when they were criticizing him for increasing rates, saying you're costing people jobs. He said, listen, inflation affects 100 million families. If we lose 2 million jobs, I'd rather do that. I'm paraphrasing. I think it's more important that we save money for 100 million families than the 2 million jobs we'd lose. And that takes a lot of guts to say that. And so when I sit there on Twitter and see people saying this, I laugh. So are you seeing any Fed hikes even in the CME group?
the CME website is not working very well right now.
Probably because it's overloaded.
It's overloaded.
Guys, we're trying to get the CME website. It's probably overloaded from people going on there. Isn't that incredible, Mo? Now, go ahead.
It's crazy. I've never seen it like this before. Here, I just got it pulled up. So
great.
Let's go to November. Okay, let's go to the end of the year. We are pricing in 21.5% say that we're going to stay the same. The majority, 41.7, say we're going to get a 25 basis point cut, but you can see the numbers just kind of dwindling. But it's amazing to see, Paul, like you were saying, we're expecting so many cuts this year, and now the majority have a consensus of a quarter point cut by the second to last meeting.
God, I love talking about these things. And again, I'm very proud of myself that I do a good job of enjoying this while not letting it affect my investing decisions. However, I literally made rules for myself on buying and not selling in order to do that unless things have changed. But when you look at these things, it doesn't matter to me what the Fed does. In fact, we were talking yesterday in the studio. I said, if somebody said to me, Paul, you can have 0% forever or 10% forever, it would never affect economy, I pick 10%. One, I want to be able to get a high return on my cash. And two, it gets rid of a lot of crap investors out there. It gets rid of a lot of crap businesses. If you have to borrow at 10%, as a business, you're only going to invest in your business when it makes absolutely great sense getting above 10%. That's what I love about talking about interest rates and business, things like that. You know, we just went into contract on a very large apartment building in another state. 2 years ago, we weren't even in the running. We were 30% below. And it's funny, my brother said yesterday, he's like, I think we're getting closer to pricing. I'm like, Mikey, no, we're already there because we were getting told, don't even waste your time making an offer 2 years ago, to now we're being told we're in the final group in the last 4 or 5 deals we've looked at that we've made a pet play at. And these are the things I sit there and say, hey, that's a benefit to high interest. Another benefit to high interest is you can sit at home and say, I don't know what to invest in. Put my money in cash, make 5%. That's a wonderful world to be in, isn't it, Mo?
Yeah, it's awesome. It kind of takes the thinking out of it. You're not going to beat the market over time, but you have a nice place to park your cash and you're not going to get zero, which sucked for a long time.
Now, I did this. Guys, I'm on Twitter and I love talking on Twitter. So guys, if you want to follow me, I'm EMPaulG on Twitter, and then find our Everything Money. But I put on here today, what are the chances the markets finish up today? So pre-market, the NASDAQ was down about 1.58%. It's currently down 1.6%. And it was, the last time I saw before was 0.99%. So it is rebounding a little bit. So of course, I put 0% chance of 38%. So far, there's only 168 votes, and I only put 4 hours on this thing. 25%, 26% to 25%, et cetera. 99% chance the markets end up today, 14% of people. I'm sure they're joking, but it is. I mean, look, we're laughing about this, but guys, I love talking about these things. I love engaging in that. I love talking. The reason I like talking so much about it is when people ask me, Paul, what do you think I should do if the Fed cuts rates? I'm like, nothing. Do the exact same thing you were doing before.
Why would you react to that way?
That takes a certain mentality, because guess what? 10, 20 years ago, I was that same way. Like, well, what's going to happen with the Fed? I used to make if I can't, I got to do this, got to do that. It's like, no. And guys, even recently, I've learned even to be more of a bottoms up investor. Worry about buying a good business at a good price. And if it goes further down, buy more of it. And that's the kind of mentality I want you to have. We do teach those fundamentals on this channel. We love teaching the fundamentals on the channel. But you're going to buy based on the fundamentals, and you're going to hold and make a killing based on those fundamentals staying the same or getting better. But more importantly, handling your emotions along the way, not getting tied up in what the Fed's doing. By all means, though, enjoy it all you can. Mo and I, we talk about this stuff all the time. We really enjoy talking about it, but we don't sit there and say, oh crap, the Fed might raise rates, so I'm not going to buy Nike even though it's fallen 50%.
Right.
No, we never discuss that. Never, ever do we discuss that. We enjoy talking.
It doesn't even factor into any type of fundamental analysis.
Zero. Literally zero fundamental analysis. Now, was I a victim of this in the past? Absolutely. Absolutely. So don't feel everybody's made emotional decisions. Everybody's followed the wrong things at the wrong time. We're not alone in that. But that's exactly why I created this community and the software. I wanted to be able to sit there and say, how do I use these tools to make the right buying decision? And then how do I use the community and like-minded investors to feel better, to sit there and handle the emotions of the day-to-day? Because it's been proven time and time again, that if you handle your emotions well, your returns will absolutely be better. That's an absolute fact. Literally, it happens all the time. I can never think of a time when I met somebody who had emotional decisions in investing and did well in investing. Never once. So guys, we're about ready to have a wait list. We're about ready to implement a wait list. So before we get a wait list going, go to our link below, click $7 for 7 days, sign up for our tools and our community. I guarantee you'll become a better investor because of it. Now, when it comes to all this inflation data, I want to give more credit to Fed Chair Powell. Literally everybody blasting him. Literally all these senators saying, you gotta cut rates. And he was like, I don't feel like we're out of the woods yet. Mo, I know you want to criticize Powell all the time. I think you just do it to be funny, but
yes,
you got to give him credit for standing up to that and saying no.
I wish he would have stood up in the previous administration.
What previous administration, Mo? Mo, what previous administration?
The Trump administration, because he.
Oh, your buddy?
My buddy. You shouldn't cower down. He cowered down. He cowered down. He was a little, you know what, and cowered down, and he shouldn't have, because he should separate government from what the Fed is. But either way, it doesn't matter. I give him a lot of credit for standing right now and saying we're not lowering rates, and we're going to stay right here as long as we possibly have to.
Wow. Mo is giving credit to Fed Chair Powell and somewhat criticizing his boy Trump. Isn't that incredible? Guys, guess what? Hell has frozen over. Mo has given credit where credit is due. I give him credit for that. Yeah, guys, he deserves a lot of credit for this. And he's just like, listen, this is what we need to do. I like the fact that our Fed governors seem to all be in line on this one. Like, you don't see many Fed governors sit. What was that?
Shocking. It's shocking.
They're all sitting there saying, yeah, I don't know about this Fed rate cut, things like that. And I saw somebody else criticizing, like, oh, Fed Chair Powell shouldn't have been saying that we are going to have cuts this year. I'm like, guys, it wasn't, he sat there and said, listen, if we see the data, we're going to react to it. But we don't think we're out of the woods yet. He's been saying that.
Yeah, for the past four years, he's been saying we are going to follow the data. He has been extremely consistent in that.
Absolutely. Now, guys, we're going live on our live stream here in just a few minutes, so we got to go. But don't forget, click the link below to sign up for our community. And don't forget to subscribe to the channel for weekly updates on the market. Thank you for your time.